Hello there, we are moving on with our Binary Options Academy project here on fairbinaryoptions.com, and it is time to take a look at the most important, or one of the most important economic releases of them all, and that is inflation. Now, when you're looking at the economic calendar and you see all these news that are here, like explained on the previous mini educational series with introducing the economic calendar, the red color here signifies or implies an extremely important event, an event that is designed to move markets. So if you are looking for volatility or for let's say a specific level to be broken, or for markets to really travel, that is the moment, or that is the news to be watched. Now, all these news here are meant for traders or for market to position themselves for the all-important central bank interest rate decision, for the all-important central bank monetary policy. But the mandate of a central bank is to keep inflation under control. The normal target for inflation is below or close to 2%. Now, inflation in economic terms, you're not going to find here the term inflation, but it is being called consumer price index. Shortly, it is being called CPI. For example, here on Tuesday, on this week, on the 29th of April, we had the German preliminary CPI. Now, this is the inflation. Or let's try to go a bit low. Also this week, what we had the CPI flash estimate in Europe yesterday, on Wednesday, the 30th of April. Now this is the inflation, and so on and so forth. This inflation, or the CPI, the Consumer Price Index, is being released on a monthly basis or on a yearly basis, but on all the economies in the world. Because again, the job of a central bank is to fight inflation. When you fight inflation, then you gotta go and raise the interest rates if the inflationary pressures are to the upside, or you go and actually lower the interest rates if the inflationary pressures are to the downside. A normal level for inflation, so for any economy that has the tendency to grow a bit, a normal level for inflation will be around 2%. Now, 2.2%, 1.8% is considered to be a healthy inflation, but if you are thinking of 1% or minus something, that already this is deflation, and deflation is more difficult to be fought than inflation is. Now let's take a look. For example, this is a CPI flash estimate for the Eurozone. See, this is the euros, the currency that is affected. The flashlight here, as this is red. And let's try to explain a bit what happened with the Euro US dollar at the moment that this was released. This was released on Wednesday, right on the last month of on the last day of April. So as you can see here, the previous, this is year over year, right? So the previous 1 year ago, it was 0.5%. The forecast was about to be 0.8%, and the estimate was the forecast, sorry, and the actual. So the actual data that has been released was coming at 0.7%. Now, the initial reaction on the euro dollar on the release was to go to the downside into the 37.70 area, but this was a fake move. Why? The initial reaction was being caused by the fact that the CPI, or the inflation, has come, or the actual has been lower than the outcome, than the forecast. If you click on the detail here, you see that if the actual is bigger than the forecast, then this is good for currency. But the actual in this case has been lower than the forecast, so this should be negative for currency. And that the market dipped something like 40 pips from the 138 towards the 137.70 area, just like that, based on the lower expectations. When you trade, and especially on the currency markets, these sudden moves are being made by algorithms, by high-frequency traders trading, and they are just reading the actual news. But from the 137.70, price moved aggressively to the upside into almost taking the 139 level, so more than 100 pips. Why? Because if you come to think of it, 0.7% now, even though it is lower than the actual here, 0.8, it is quite stronger than the 0.5 previous data. So inflation is picking up, and if inflation is picking up, it means that consumer is still willing to spend, and this is positive for the currency. So all those dips were just meant to be bought. Stay tuned for another example on the CPI here, but this will come with the next recording. Bye bye.